Back, millions of Americans are watching the Federal Reserve today to see if borrowing money is about to get cheaper. Today's the day that they'll talk about it. Tomorrow's the day that it should happen. Joining us now is Ernie Burns with Burns Estate Planning and Wealth Advisors. Ernie, always good to have you here. Tell us about what this big news should be tomorrow and what you think the impact will be on what people do with their money.
Well, today they're going to set up everything for cuts tomorrow. The market's bet in 100% they're going to cut rates. So therefore, with the economy slowing, spending leveling off, and jobs are definitely slowing down, all that together is a reason to cut rates. They have to spur the economy. You have to start creating jobs, borrowing, refinancing your house and mortgage. Just going to create leverage in the U.S. to stir the economy.
So aside from the political discussion going on with the furloughs of jobs on the table, on top of corporate loss of jobs that we're seeing across major companies from Amazon to Paramount to, I mean, the list goes on and on. What do you think cutting the rates will do to so many people or for so many people who are literally dealing with job loss?
Oh, well, federalists, they can't do anything about it. But what you can do, if you need to borrow money, it's going to be a little bit cheaper.
Okay.
But it's going to stir other jobs in the economy. People start hiring again. If they say, hey, okay, now interest rates have dropped 1.75% in the last 2 years, now I can go ahead and build that building. I can build that house. That's going to create jobs and stirring the economy in that manner.
What's the lag time usually between when the rate gets cut and when you start to see those new buildings come up or those new jobs be created?
Jobs are faster, usually within 2 to 3 months. It's pretty quickly. New buildings, things that has projects. The architects have to get involved. It takes a little while. And deregulation, let's not throw that to the side. Deregulation is now able to open a new company faster, to get permits much faster, whether it be local governments or the federal government. That's stirring the economy also. And all this is getting implemented along with the tax cuts starting now and throughout next year. The first quarter of next year should look very positive.
And talk about whether you are hearing news of possibly another rate cut in the future.
Tomorrow's 100%. Looks like December is around 50%. They're not sure.
Okay.
But come early next year, we're looking at several more rate cuts.
Okay. So if you're watching this segment right now, you're wondering, what does this mean for me? What does it mean for people today?
Well, with retirees, with rate cuts, you know you're going to have a lower interest on your CDs and savings accounts and money markets and your fixed income. Not the greatest thing. You have to basically be very targeted on how you invest. Right. And on the other hand, with rate cuts, you're going to have, it's easier to borrow money or refinance that house if that mortgage is too expensive. Or if that car loan is too expensive, you can refi. So there's benefits there, and that credit card debt would go down a little bit too because the interest rate's going down. So there's some positives in this also, all the way around.
Ernie, with just a few seconds left here, about 20 seconds left, the impact of AI on what we're seeing in the market right now. What are you thinking about?
Oh, well, if you're invested correctly, you're making really good returns. In the same instance, it's the early stages of AI. So if you're investing correctly, you're going to do very, very well. But if we were to get into the reality of how our economy will work 10 years from now, it would blow everyone's minds. It's something that's going to be created very useful for the U.S.
To be continued. Thank you for coming on.
All right, thank you.
All right, Hannah Gard, how's the